Hello guys, welcome back to a new video. Welcome back to the channel. In this episode, I'm gonna show you how to buy and sell in the same day. Now, what do I mean by this? What do I mean by buying and selling at the same day? What I mean is that it doesn't matter if the market is trending up. It doesn't matter if the market is trending down. It doesn't matter if the market is ranging. You can take both shorts and longs. Now, is this even possible? Selling in a trending market, in a market trending up, and buying in a market trending down? I know that this might seem wrong or not optimal because a lot of you believe in the bias, daily bias, for example. A lot of you have the idea of the daily bias, meaning, let's say tomorrow you are expecting a bullish day. So that's a daily bias on your ESC, for example. You are expecting a bullish day. So it is only logical that you're going to take buys, you're going to take longs, you're going to buy tomorrow because you are expecting a bullish day, and that is your bias. Now, what if I tell you that you don't need to have a bias? It doesn't matter if the bias for tomorrow is bullish or bearish. Even if you are right, you can still take longs and shorts no matter what. Let's say, for example, tomorrow is a bullish day, all right, for your USD. And let's say this is the opening price. The opening price, let's say this is midnight open. Now, do you think if price is bullish, price is going to launch from this point and it's going to keep printing up close candles from midnight open, New York time, till 4 p.m. New York time? Do you think the market will just keep printing bullish candles, up close candles only? Absolutely not. The market doesn't move like this. The market moves like this. So as you can see, this is a bullish day, right? And it is a series of highs and lows, or a series of expansions and then pullbacks, retracing. Expansion and then a pullback, expansion and then a pullback, expansion, pullback, expansion, pullback, expansion, pullback, until the day closes. So even though you have a bullish bias, you can still short the pullbacks, right? You can still short the pullback here. Or here. Or even here. So you can buy the expansion, sell the pullback, buy the expansion, sell the pullback, buy the expansion, sell the pullback, and so on. Now, is this possible? Yes, that is absolutely possible. If you know that the market is pulling back, the market will not just keep trending up and up and up, and the market needs to pull back, then you can short those pullbacks. You can buy when the pullback ends, and you can short from here and buy from here, sell from here, buy, sell, buy, sell. Now, how does this look in the chart? I know this is a line chart, but let me show you a few executions on the chart. Now, this is an MT5 screenshot. I posted this on my Twitter account. So let's take a look at it. So just like I showed you, and this is the 1 minute chart. As you can see that we are trading down and pulling back. Trading down, expanding lower, pulling back. lower, pullback, expanding lower, pullback, expanding lower, pullback, expanding lower, pullback. So as you can see, this trend, downtrend, it contains, or it is made by a series of lower lows and lower highs, right? So I woke up somewhere around here. I opened the chart here. I saw this downtrend. I saw this expansion lower from here. Now I know that the expansion will not last forever. The market will not just keep trending down and down and down. It needs to pull back at some point, right? So I identified that the pullback is going to happen here. So I took a buy to here, not here, because we are in downtrend. And I know that this is a pullback. The market will not trade higher. Otherwise, or else, this would be a reversal. So I took a buy. I longed the pullback. After the pullback ended, I shorted the expansion lower, targeting the previous low. Exited the position. After the expansion lower, I know that there's going to be a pullback. So I longed the pullback from here. So as you can see that this is possible. All you need to do is to identify when the pullback, right, is going to start, and then when the pullback is going to end, and it's time to another expansion. And that's it. That's all you need to identify. So in this video, I'm going to show you a chart example on Euro USD, the daily chart. This is the 1 minute chart. I'm going to show you the daily chart. Price is fractal. Remember that. Price is fractal. So this is a very good example of showing the fractality of price. Now, before I start showing you how that looks like on the chart and how you can identify the pullback and the expansion, make sure to follow me on my Twitter account. I share here daily charts, tape reading charts. I share my trades so you can see executions. You can reverse engineer my trades and understand the logic behind it. Also, I want to give credit to Dave. Dave teaches FX. These are his concepts, and I'm only showing you how I personally trade them. I'm not going to reteach his concepts, and do not rely on my videos to understand his concepts. Do not rely on my videos to trade live markets. If you like the style that I'm trading with and you found reason in it, it is time for you to watch this playlist here. Again, I'm only showing how I use his concepts. I promise you, after watching this video, and I know that the introduction was very long, but it is necessary. After watching this video, if you are a new trader, if you have a different style of trading, I promise you that you will see the market differently, in a simpler way, and you will know that the market is not random. And now let's start the actual lesson. So we have here the daily chart of Euro USD, right? We have the daily chart of Euro USD. Now we can clearly see that the market here from this point was trending lower. All right? This is easy to spot. And then from this point, it reversed and it started trading higher. Easy. Now, first of all, let's focus on this. Let's focus on this downtrend right here. The first thing you need to do when you open the chart is to mark up the highs and the lows. That's the first thing you need to do. So let's do that together. We have this low right here. Let's start from here, right? And then we have this high. In an uptrend, we're expecting a pullback, maybe to here, it doesn't matter. And then printing a low, and then printing a new high. But in our case, we didn't have that. Instead, we had this one right here. We have a lower low. So instead of having a higher low, we had a lower low. So now we know that the market is shifting to the downside. So after this low, we had a pullback. And then we had an expansion, right? So basically, after confirming the lower low with a body closure below this low, we know that we are trading lower. So we had a pullback, and then we traded lower. And then we put in a high, pullback, and then we're trading lower. And then a pullback, and we're trading lower. Pullback, creating a new low. Now here, instead of putting a lower high, we put in a higher high with body closure. With body closure. So this is important. Now after seeing this, putting a new high, now we know that the market is shifting to the upside. So what happened is we created a higher low, traded here, and then putting a new high with body closure, and then a pullback all the way to here, creating a higher low, and then putting a new high, and then a pullback, and then a high, right? You can consider this as a high also. And then a pullback, a high, a pullback, a high, a pullback all the way to here. And we have this huge expansion to the downside. And then what happened next, is creating a new high. So, I'm going to explain this later on, but let's focus on this one right here. Now, you can notice that after each low that has been created here, after each new low, the market returned to the previous swing point here, creating a new low, and then they return to the previous swing point. Here also, creating a new low, and then topping into the previous swing point. Creating new low here, and then topping, pulling back into the previous swing point. Creating new low, and then here, as you can see, we didn't have that top. We traded here to this fair value gap. So price traded to this fair value gap right here, and then created a new low. So now we are expecting price to return to that previous swing point and then traded lower. So we traded all the way to the 50%, and then we're trading lower from here, as you can see. But we failed to create a new low, and we're creating a new high. So now the same principle, we're going to apply it here. Price here creating a new high. So it returned to the previous swing point. Let's make this green. And then putting a new high. After that, return to the previous swing point. Creating a new high, returning to the previous swing point, right? Creating a new high right here. And then here we didn't have a return to the previous swing point. So this is called an unmitigated area. And then price did a pullback only to here to this fair value gap. And then we put in a new high. So from here to here, this is a new swing point. Price returned to the 50% of it. And then put in a new high. And then we violated this low. So now, from here, we know where or what is the area that we want to sell the expansion from, which is the previous swing point, as you can see here. How to catch an expansion. The expansion will happen after, in most times, after it returns to the previous swing point. So we have an expansion here, creating a new low, and then starting pulling back to this area. So the expansion, the new expansion to create a new low, started after topping into this area, and we traded lower. And then we started pulling back into this area, and then we traded lower, pulling back to this area, and then traded lower. So now we know that in order for you to get in the expansion, you need to look for sells inside the previous swing points. Same here after the reversal. If you want to take expansions, you want to wait for price to return to the previous swing point. Here's an expansion. Here's another expansion. Another expansion from this swing point. Another expansion. Another expansion. So as you can see here, this is intermediary structure, right? The same principle, but we created a new low here. So we confirmed the previous low. We confirmed that the market is bearish after violating this low here, putting a new low. Then we traded higher here, as you can see, to the previous swing point. We topped on the lower band of it, and then creating a new low, and then the expansion started from the previous swing point, which is this one. And then, as you can see, my short from here, I took a short after topping into the previous swing point here, right? So this is how you catch the expansions in a downtrend and expansions in an uptrend. Now, how do you catch pullbacks now? How do you catch pullbacks? Now let's focus on this fraction here, on the uptrend. After an expansion, the pullback price started pulling back after it hit the previous swing point to the left. So topping into the previous swing point, and that top caused the pullback, and topping into the previous bullish swing point or the current swing point, and then it is the one that caused the expansion higher into where? Let's extend this, the 50% of the previous swing point, and then we had a pullback, right, to the previous swing point or the current swing point, the bullish swing point, and then trading higher. This pullback started after topping this swing point right here, topping into the 50% of it, went way above in this case, but never traded above this high. And then pulling back to where? To this area right here, right? And then trading higher into where? The previous swing point. It offered just a tiny pullback, and then we're trading higher into where? Into that large area to the left. And also we have this intermediary swing point here. Let's change this. Let's change the color to blue. Tapped into the 50% of that intermediary structure. Or this is the SND responsible for breaking structure, right? And then this one right here sent us all the way down to where? To that unmitigated swing point that we didn't tap into it here. Price traded all the way to here and then traded higher. So we have this low and we're creating a new high. Now, after creating this new high, price starting to pulling back only after topping into the 50% of that swing point, as you can see here, that previous swing point. So now you know when expansions happens and when pullback happens. Now let's follow the market structure from here. Price, after this one, after this huge rejection from the previous swing point, the previous bearish swing point from the 50%, we start trading lower and lower and lower. And as you can see, we are returning to the previous swing points, lower, lower, and lower, and topping into what? Let's remove this. I'm going to show you what is this later on. Topping into where? If we extend this in time, the previous swing point. So as you can see, you can have multiple tops into one single swing point. In this case, we didn't top into the 50%, so there is still a chance that we can see a nice rejection from it. That it will offer a nice rejection. So as you can see, price started, let me zoom in. Price started trading lower and lower and lower, creating an equal lows here, and then run this equal lows, triple bottom, so liquidating this low, topping into the 50% of this area. And most of the time, guys, most of the time, the 50% will give you a rejection. Here, we had that here, 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 also here after price reversed. So focus on this area. We tapped into the 50% and it offered us a nice rejection to the lower band of the area. So the 50% is a powerful level. Anyways, we liquidated these two lows, topping into 50%, and it traded higher. Now I took a trade from here. I took a trade when price topped into the 50%. Yes, I took a trade from the daily chart. I traded the daily chart. Why? Because it was easy money. It was easy 1.3 R. And let me show you, let me look for execution. Yeah, this one. So I posted a chart before this happened. Before this happened, I posted a chart. It was a tape reading. So as you can see here, this is the 4 hour or the daily. This is the daily chart. Same, right? This triple bottom. As you can see here, price up into the 50%. And if you go lower on the 5-minute time frames, can you see the rejections, the bodies? So I took a trade on that day, and here's the result of it, as you can see. Now, this is the daily time frame. So as you can see, you have a lot of opportunities to trade, to take trades, to take shorts and long in this downtrend, and longing and shorting in this uptrend. This is the daily chart, but imagine that this is a 1-minute chart. This is a 5-minute chart, 1-minute chart, even a 5-second chart, right? Price is fractal, guys. And this is what I showed you. This is the 1-minute time frame on your USD. Same thing. Price heading up, reversal here. This is pretty much the same thing, as you can see. Now, I believe that this is the end of this video. There is more to it, guys. This is not everything, but this is the foundation of market structure. Even if you take these pullbacks on the downtrend, you can see that those pullbacks happened for previous sweep points. For example, this pullback right here from the 50% of this zone. Also, we have, let's say, this, as you can see, from the 50%. This pullback also happened from a zone that is located in the left of the chart, in the left side of the chart. So as you can see, you can trade the market using only highs and lows. So let's end this video here. If you have any questions, leave them in the comments or DM me on my Twitter account, and I will reply to you as soon as I can. Now, happy trading and good luck.